The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another wonderful day at the headquarters of technical trading and investing. It is TFNN.com, and I, your humble servant, available at 877-927-6648. The koala bear of Wall Street, as I'm calling myself. Does it count if you give yourself a nickname? I don't think so. I think it only counts if other people give you one and it sticks. But we'll never know. We've got a market that's up and down a little bit as we look at today's action. We're trading out at, need to update this because that is incorrect. It's a few minutes ago. Trading out at 1832 on the S&P cash. Composite NYSE composite volume on the big tape is 2.27 billion shares, so slightly ahead of yesterday at this time, just a slightly less than the downside we've seen. I've done a lot of work on options last night. In fact, I went through all the options curves on all 500 of the S&P stocks last night. I'd say 85% of them are pointing lower, some much lower. Some just a little lower. And when we look, we'll talk about it more and show some charts later in the day. We're probably going to be doing a webinar sometime in early February on how I use options. But we'll talk a little bit about it today. I'll be writing a paper and doing a webinar. So we'll be doing a little bit of both of those things. But we'll throw back to history today. And that is in 1835. Trading in the U.S. stock was halted for the first time. Morris and Canal Banking Company amid widespread manipulation of the shares. So we kind of think, well, halting stocks relatively new, almost 200 years old. One of the things that I learned early on in the stock market is that there's nothing new on Wall Street. There can't be, because speculation is old as the hills. Whatever happens in stocks, in the stock market today, has happened before and will happen again. And that's a quote from Jesse Livermore out of Reminiscence of a Stock Operator. And I thought, how poetically true. Sometimes you hear something, you just know it's true. But just about everything I ever think that's new in the stock market, if you look back, has happened before. There's a very few new things under the sun, dear Horatio. And how does the market maker specialist know where to open a stock after a halt? Interestingly, it is a market made. That is, that they sit there and wait until the bids and the offers line up, and wherever the peak of those two are is where they open it back up. So there is a kind of an auction process, and that will be people putting in bids, people putting in offers, and it will go up and down, and they let it settle after everybody's quit doing that. Normally they give them 10 to 15 minutes of time. Pretty much it's almost the same as pari-mutuel betting. We'll say that there's a race starting in 30 minutes. People will continue to bet on one horse or another. The odds will change. A lot of people will wait and hold their bet to the last couple of minutes to see what the odds actually are before they place their bets. And that's, for the most part, the same way. You basically have people saying, I'll buy it at this level and I'll buy it at that level. And normally people on the way far wrong sides of that, just before the stock starts trading again, we'll see, some level, and they'll drop all their orders on one side or the other. Pretty soon it just narrows down to a price, And, of course, all those people start piling back in instantly after the stock starts trading. So there's almost always huge volatility in one of those after a halt. But for the most part, it is a kind of an auction process on both sides with the bids and offers coming in. And when the market maker finally sees where they're lining up and where true supply and demand are, that's what he'll open up a stock at. So is that what creates gaps? Gaps are created normally by news overnight before a stock starts trading the next day. So sometimes you have gaps during the day, and sometimes it is news after they're halted. Sometimes it's just news that comes out, and it looks like a gap. There may be a little bit of trading in there, but a lot of times they can move fairly quickly. Today we had some movers. We're going to look at these charts here in a minute. Bed Bath & Beyond, and boy, is it way beyond. Earlier, or at least this morning, it opened up $7.72 light, almost 10% less after missing its earnings and numbers. I was rarely in Bed Bath & Beyond, probably been in it 4 times in the last 2 years. I happened to be in it a couple of times buying Christmas presents for deer season. That's DEAR, and it was busy. I didn't really see a lot of business not going away, but of course that's anecdotal when you go to one store in one part of town. I was looking at it. We're going to look at what the options curve looked like in BBBY. It was fairly negative, and the reason why I decided not to actually short it. Family Dollar was off $5.79 on the open this morning. Its bottom line miss on inline revenues. But what can you say? FDO off fairly strong, almost 9% this morning. Macy's was up 7% after boosting its guidance. Basically, it was boosting its guidance because it's firing 2,500 people. And that's a lot of money that you can save over the year. It can continue to make earnings per share look good while the company starts to drown. If you're firing people, it means you're not growing. And, of course, the only reason that Wall Street really loves this is if you've got a big stake in Macy's, gives you some time to sell the thing out. We're probably looking at massive distribution through the next quarter in Macy's, just like IBM. You can hold a stock up by firing people, but eventually the true selling pressure will come back into a stock, and I think we'll see that fairly soon in Macy's. Any of these brick and mortar stores just absolutely getting hammered over the last few days. When you look at China, I'm kind of watching it. Looks to me like all of the Orient is fairly weak. Nikkei was off 1.5%. The Shanghai was off 0.8%, and the Hang Seng was off almost 1%. I suspect that we're probably going to be following them, albeit at a slower pace. But I have a feeling that there's some bad things happening in Little China. Big bad things happening in Little China. I like that movie. It's actually on streaming again this month on Netflix. But it's there's I don't know if it's just cooling or if there's something else happening in China, but certainly starting to get my spidey sense going up in there, and a lot of it is that pop in the Shibor, their interbank lending rates, bouncing around as much as it is. So it is problematic. Other things, well, that's pretty much what we have there. I wanted to get into charts fairly quickly today, so we will do that. Let's go to BBBY first, because this is going to set up what I discussed later in the day. As I said before, you can always give me a call at 877-927-6648. You can also email me if you don't want to go on the air at path@tfnn.com, and you can always post questions in the den. So we've got a triple threat of ways to get me to answer questions. Unlike a certain governor, I will not be going on for 2.5 hours explaining and apologizing. But what can we say? Anyway, Bed Bath & Beyond, and it is a Beyond today. Let's see what we have here. What do I have here? Am I not getting? I'm going to have to figure out what's going on here. Program options. Server. There we go. I don't know what's going on. We've got a problem with my cache on this computer, and I'm going to have to fix it. But anyway, BBBY down strongly, saw a low of $68.83 this morning. And what can we say about this other than it's already blown through the first gap down? And this is one of these smaller three-gap plays. I would have liked to seen bigger gaps, but my guess is that this is enough of a move down that you're going to see this thing move to that gap that's at about 62. 13 million shares already, pretty enough to come back and wipe out all the trading back to March 19th of 2013. But certainly a huge gap down, probably exhaustion move. So if I was short, I would probably be picking up the pieces around here. My guess is that you see this expire somewhere around $70, and we'll get into that a week from Friday. But later in the show, we'll show you the options expiration. But one of the problems that I had with this was, I think I actually saved it, so maybe we can get it up here and show it. Netflix, Bed Bath & Beyond. Here we go. I actually saved it up here, but it was 6 days to cover on the short interest. So a lot of people were already figuring out just how much, but yeah, 6 days to cover for the shares, and that was back through February. We're going to start getting those numbers again shortly, but for the most time, we've got a stock that's been fairly heavily shorted in the marketplace, and that's one of the reasons I didn't pull the trigger on it. The other was it was a little unclear to me about the volume at the highs. This one had 1.8 million shares on August 6th, broke through it, closed below it on 1.5 million shares, which is okay, but didn't make me think that the wheels could fall off the wagon, being just 300,000 shares short. I would have liked to seen 1.1 million would be one of the other reasons to come out here. But when we look at options, a lot of times they will point out where a stock is going based on what is known as the wisdom of crowds. And we've talked about that a little bit. But let's go to BBBY here. And then we'll come back and talk about it more. But this thing, to me, it's probably going to track back up. But it was pointing at 69 before it opened today. We'll be back in a minute.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
How painful can it be to play music as a weapon? Something so beautiful. And you find an engineer that figures, I tell you who needs to apologize for 2 hours. It's our engineers that keep playing the horrible disco music during breaks and bumper lead back ends. So they need to do a Jeff Christie and apologize for about straight 2 hours on why they find this the worst, stinkiest music. And of course, for those people really not involved in the 80s, and even the late 70s, but probably 79 and later when cocaine became such a big deal. There were giant mountains of cocaine that were given to program directors to play that crap originally. The only reason it's even slightly known is because of cocaine. And I think we can say drugs just didn't shatter lives. They've shattered my ears with this horrible crap, just because program directors at radio stations were being shoved around. Now you don't hear so much of that anymore because it's all computerized. People are have calipers put on their heads, dials in their hands to whether they like music or not. It's all computerized, homogenized. Probably not worth listening to a lot of radio for music anymore. I like Sirius XM's got a good playlist on the Loft and some of the other ones. But when we think about the tragedies of drugs and the lives they destroyed, no one ever thinks about my ears and how they were destroyed by the horrible crap played over the 80s and until pretty much the end of the cocaine revolution, what was about 1990, and the rise of computerized radio stations and playlists. Anyway, I digress. Interesting take. It's actually true. That's if you'd ever been in there. I remember, I think it was either 1985 or 1986. I wandered into Consumer Electronics Show with my boss, and he was looking at buying just a ton of stuff. And he went behind the curtain. I didn't see him go behind the curtain, so I thought, I turned around, looked. I was looking at something, looked around, and I thought, well, I'll look behind this curtain and see what's going on. There he was, big giant mountain of cocaine, and he was sniffing it up. That's about 1985. And I thought, oh my God. I didn't think a whole lot about his business ethics, and I certainly thought less of his personal ethics after that. But he taught me a lot, mostly about all the ins and outs of screwing other people over. But I digress. And he's been in this business for 30 years. Well, apparently 30 too long. Anyway, we've got crude moving lower. Andy Heck is in the bullpen warming up, throwing some curveballs in the den out here. He'll be following me shortly as he stalks me every Tuesdays and Thursdays. Anyway, we're looking at some movement. We're going to look at some of these other stocks that we've been talking about. Let's see. ARMS Holdings. This is the first day of, or a second day actually, of Consumer Electronics Show. After a lot of analysts had been wandering around the show last night, they talked about some decent downgrades on ARMS Holdings. I have not been high on this company for a while, and anybody that's listening too many times to me knows exactly why. That is that they are 18 to 24 months behind Intel on being able to build smaller dies, is what it's called. But basically, the whole point of using less power and making smaller devices is just how close you can put each of the traces and the transistors to each other. It's described as a nanometer. NM is the abbreviation. Most of everything that ARM is doing now has to be done through Taiwan Semiconductor, a fab in Taiwan. For the most part, they can do 28 and some 24 nanometer stuff. We're already seeing 18, and within probably the end of the year, going to see 14 nanometer technology out of Intel. They've really gone out after the wearables market and are in a great deal of tablets and PCs at the show, a great deal more than they were last year. And I think a lot of people are saying it's going to probably hurt ARMS holding somewhat. And I think what's pretty much why we're seeing them down today is the forecast that Intel has been talking up about being in everything, not just in the PC anymore. So we're seeing them down. Volume is not horrifically bad in ARMS Holdings. I'm not saying this company's going to fall off and be $10 anytime soon, but certainly down on stronger volume. By the end of the day, I suspect we're going to be at least the same kind of volume we see on the 18th of December, opening up probably that mid $47 range and possibly $44 on the pullback in the broad markets. Be back in a second.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we've got a market that's pulling back a little bit, but we did go back up, tag 1843 today. It's probably going to be on lighter volume. We've got just a little over 2.4 billion shares on the consolidated tape. Not much of a pullback now, but I'm not expecting a huge move. I think this is the precursor to a bigger move in February. I think we're probably going to go down, close out next week somewhere around the 1800 level on the S&P cash. Both the January options and the February options are showing around that $1,800 level on the SPYs at least. So probably looking at 30, 35 points lower. I think that's the start of the move down on weaker stocks. We're probably going to have some kind of bounce. Maybe it bounces back up to 1830. And I think at that point we're going to see all the volume fall out, maybe end of February, something like that. And it's going to be apparent that there's no gas left in the tank in these markets. And then we're probably going to see yet another bigger move down in February. But I think we're probably going to have to go through this expiration. One of my other great Jesse Livermore quotes is that markets don't turn on a dime. I'm paraphrasing it. Maybe I'll get it during the next break. They don't turn all at one time. And, of course, I've been anticipating a move down in the markets, mostly because we continue to see weaker advanced decline lines in the market. And A few things. Oh, one of the other things that we want to talk about is why options don't work very well during expiration for showing us where something's going to expire. Normally, if you've got either earnings coming out in the last 6-7 trading days before expiration, probably not a very good indication of what's going on. You're going to have a lot of people getting in there making some rather wild bets. Without that kind of volatility, expected volatility that you see for earnings, one of the other things that makes these predictions not as good as possible is a thing called the implied volatility. If you go on any of the sites that talk about volatility, like iVolatility, or you go to the CBOE, and you can look at the actual data on any of those sites, you're going to see something that says implied volatility. And you're going to get the historical implied volatility. The one we're looking at now is actually the S&P. But if we went back and looked at something real quick, let's look at AAPL, Apple, good indication of what we've got. The implied volatility is just over 30. One of the other things that can make your predictions and your options pay off a lot better is when the implied volatility is below 30. And you also have the markets, the VIX and the S&P, also fairly low, let's say below 14 or 15. So we've got some fairly decent, good indications on the broad market with the VIX down where it's at. But at the same time, you don't want to be paying a great deal for the premiums on stocks if that's what you're going to pay for options. But both of those being low gives you a better indication of what the actual volatility is going to be underneath the stock. So what I am showing now, if you're just tuning in, is if we're looking at options, the one thing that really had me stay out of I can't even say it, Best Buy Beyond. Anyway, BBBY, was that the time to cover was 6 days. So if I was wrong, I was probably going to get squeezed pretty hard. But the two things that really make the indications very good are a overall market with a low VIX rate, but also the implied volatility on the underlying stock somewhere below 30. Normally, those are also my two rules for buying single sides of a options position. If you have high implied volatility, the option there is to most likely be a seller of options, maybe a spread. Maybe you buy and go long and buy puts on the other side, or sell puts on the other side, or some kind of combination of long an equity or short an equity and buying puts or calls. A lot of times, especially if you have kind of a direction, you know that it's not going any higher or lower. Not a bad policy to get. And of course, maybe go into February's right now when you look at these options and get 7-8 days of decay if you're looking at a stock that's going nowhere fast. And we've got a lot of these stocks that are probably, I'm going to say 2.5% higher than where I think that are going to expire a week from Friday. And that's also not a bad thing to do. And just set up and collect a fairly decent amount of premium over the next 6-7 days. A lot of times we're going to have a little bit more action, especially we're probably going to look at that VIX moving up over the next few days as we get into options expiration. But not only that, we're going to have a lot more earnings coming back in, which is probably a good indication that we'll have a higher VIX also, especially with as many of the companies weighted in retail and as bad as they've been doing over the last couple of days for most of those retail stocks. Most of them have been under some pressure, at least somewhat. But just a little taste of what we'll be talking about in that webinar in Friday. Anyway, we're looking at ARMS Holdings, Bed Bath & Beyond. I'll think of it now. Here it is. There it is. Best Buy and Beyond. But we'll look at some of these other ones out here. AAL, basically they're saying that doesn't matter the weather, we're going to make money anyway. Comments made them hop just a little higher today. ALU, I don't know why I'm getting there we go. Alcatel-Lucent, kind of a downgrade. This stock has been doing fairly well off the lows. I probably should have caught this for the Tech Insider. I was thinking of playing it, and the reason that this stock really has taken off since June is about the old Mr. Snowden. Once everybody knew that the NSA had backdoors in all U.S. Hardware and equipment, especially the Europeans started demanding that any new routers be from Alcatel-Lucent, and this thing's been moving up. Basically, though, some words out from some analysts saying that probably the most of that is in. When we actually look at the shorter-term value on these charts, if I can get it, we did have this thing pretty much come up and with a very light volume get into the candle of the last high, which is that December 11th. So as we look at this, you get the bounce down today. Volume is picking up. You probably want to look at this if the problems with U.S. technology companies continue. This thing back down around $3.50 might be another good play back up to these highs. You still have an untested high out here at $4.68. C-Trip. This thing, we talked about it yesterday. Pretty likely that it was going to come back into the gap. We are back in this gap today, and volume is higher. A lot of these, like I said earlier, I'm looking at my spidey sense in the China area of the markets start to pick up, and I'm actually seeing this kind of high volume today as more confirmation that we're probably going to be seeing, I think, some weakness in China, at least in their markets, that I think are going to bleed at least a little bit into the United States. But pretty good indication this thing has come down with at least the same or higher volume that we could see lower prices in C-Trip. This thing did have a nice top, just a few pennies short of testing its highs at 61 bucks. So you don't have anything back in those. And you do have two decent now sized gaps that probably are out here, but you've got one more down around that $33 level, and we could see, let me zoom out here a little bit. You've got a couple out here at this $33 level, but you've got yet another giant one back at the $25 level. So we got to be watching a lot of these stocks for what they're doing out here. The other airline doing fairly good today is United Continental Holdings, UAL. Again, everybody's saying that the bad weather really isn't going to affect their profitability. I don't know exactly how that works since everybody figured it would, but I think just coming out and saying it is all they needed to do for a nice 10% bounce on the open. This thing did go to 45.88 today, but no sign of these airline companies getting any weaker. And we've got Andy talking just about how fuel prices are going to go lower. Maybe we've got that perfect storm for airlines that we haven't seen in 25 years. Federal Mogul, also another one moving quite strongly today. And what else can you say? This thing is breaking above its previous high from November 26, one of the few ones that is with a volume. This thing has got some decent volume. You could almost make a case, the conservative case, that you want to look at the October 23 day that had 1.5 million shares. But I think we're going to get awful close into that. You'd still like a long term for this thing to come back to 16.5 to actually make it any kind of decent play, but you take a look at it. Pier 1 Imports falling out of bed this morning. Another one of these retailers, especially along that Bed Bath & Beyond sector. Any of these retail mall strip centers All these places seem to be doing incredibly weak business. Not quite enough volume to blow out the bottom yet on Pier 1 imports, but I suspect we'll have it by 4.8 million shares by the end of the day. That opens up an untested low back at 19, and at that point, if it came in with lighter volume, maybe you've got some kind of larger trading range. But at the moment, still problematic about what we're doing in those about those strip mall centers. And Acuity Brands Holding. Take a look at this. Just a huge blowout move to the upside today. One of the few that actually is getting it done with a volume. And I've got my notes written down on this. Beat estimates by 12 cents and beat on revenues too. So you just can't hardly beat on this. These guys sell a lot of industrial lighting for building and office spaces. So kind of interesting to see these guys have such a blowout quarter on the business side of business. But it's everything that you look. And when you let's go back and look at this one on a longer time scale and everything. I mean, this thing's been nothing but up. Probably have to look at this as some kind of blow off top though, and look for this. Put alarm back on at 110 and see whether or not it comes back here with lighter volume. You might have the setup, but to me, this looks more like a blow off top, and probably you've seen the exhaustion move for this stock. And while it will still be strong, probably going to be heading it back to the 110 level. Satisfied ease. I don't know what that means. BBP. We'll take a look at some other stuff. Moving on. Got another couple of minutes to go, so let's look at my scans and see what we've got here. There's a few others out here that make me think we've got some movement in these markets. ServiceNow, kind of watching this one to see whether or not it was going to have the kind of volume necessary to blow out. Yesterday, 2.3 million shares. Today, 1.5 million shares. So when we look at companies like this, I'll get the profile. But it is somewhat interesting to see so many of these stocks hitting these highs with less volume now. ServiceNow engages in the provision of cloud-based services to automate enterprise IT operations primarily in North America, Europe, and the Middle East, Africa. Sounds like the whole world and Pacific. Why didn't they just say the whole world? Its services comprise management applications, including project management, IT cost management, and IT governance. But certainly not the kind of volume. You know, they got into it, went above it yesterday on decent volume, 2.3, but it was going up against that candle, which is the October 24th candle. 3 million shares. Okay, so light yesterday, and it's closing back below one more time. Kind of what we're looking at in most of these markets. Oop, I wanted to get back in here.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Lurking around the corner, getting ready for his show. Just a few minutes talking up in the den about inventories. I was talking a little bit about Monday and the warmer weather coming. And probably the drop in natural gas over the next couple of days. And he says the winter isn't over. I'm willing to bet it is, because it's going to be 80 degrees down here this weekend in Tampa. That's all I care about. We'll be doing everything we need, like running around, having fun, and not for long, but good enough. All I need is 2 more days of wonderful weather. I've got people visiting from up north, and they're getting a little claustrophobic. A little rain today, but I think the next couple of 2 or 3 days is going to make up for it, especially when they go back to that northern climate soon enough. I think they'll be more than agreeable on that. And what I'm looking at mostly over the next few days is the McClellan Summation Index and the oscillator. Oscillator's been heading down for the last few days. We've been looking, the input for that is the advancing and declining issues. We can have fewer and fewer stocks moving up, moving the indexes up, but fewer and fewer people that are pulling the wagon, and more of the people that are in the wagon being pulled. Today, right now, we're at a 41-57 split on advancing and declining stocks. So even though the market is about flat, we still have a great deal more stocks On the declining side, then the advancers. Right now, yeah, we're basically flat on the S&P cash, 2.6 million shares. I think the bigger issue also is the test of the high at 1843 today with this lighter volume. Like I said, I'm not expecting any huge movement, but I'm thinking the beginning and the weakest stocks are going to be moving down over the next week. We'll probably be talking more about stocks and earnings that are going to be coming out next week and foreshadowing those. But everywhere I look, we're seeing a lot of stocks getting blown out in the retail chain. And I think we're probably going to be looking at more of these stocks seeing some weakness and guiding down, especially in the international sector as I watch China and that Shibor. Some of the other things make me think that China is not going to be quite as strong as everybody's making them out to be next year. But keep an eye on that advancing and decline line into the close today. If we still don't get a 50-50 split, we're probably going to see a fairly decent indication in the next day or two that the summation has indeed broken it back down and indicating we're probably going to have a fairly decent trend, even if it's small, to the downside. Costco, someone just brought up in the den. It is up, a nice one. It came right back down to a gap. It did do that on a little lighter volume. It gapped up on the 10th of October with 2.3 million shares. Actually, the volume was higher yesterday, wasn't it? Ooh, that's not good. I'm glad I took a look at this. I thought I had the last few days, but this thing did come down yesterday with 3.6 million shares into the gap, which had 2.4 million shares, which sets up a pullback to the 110.15 level on October 9th of 2013, where it had 5.8 million shares. So this thing does look like it's going to want to come back out here and test its last high volume low. What can you say? Ooh, there he comes. Andy, I see him. He's got that fin. He's a land shark out of Las Vegas, ready to talk about commodities. Anyway, here he comes. He's got 3 barrels down. How does he do it? Why does he do it? See you tomorrow. Same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.